All right, this is where it gets excited. We're going to go over an example of how I actually help my clients. So let's just move this over here. We're going to need my face on this side for this one. But we're going to go through exactly using this spreadsheet, an example of how I help clients and the way that we plan through it. So I want you to do something similar to this. And a lot of times this happens closer to the end of the year. So we are a little early in this, but however, you need to start thinking like this, okay? So here, let's just put this all out on paper. And the more you know, the less taxes you owe. So if you've never done anything like this, just keep your eyes out. And if you have a business, maybe we'll start going over some other crypto loopholes you haven't thought of. For example, nodes. If you don't have a business, nodes or mining is a great way to get access to deductions and get invested in crypto even more. You're putting your money back into the industry, in return, getting the ability to deduct everything that we have on this page. So let's just go over an example, like with short-term capital gains. I put 150,000. So your net gain 150,000. So I'm using 30% as a tax rate. So 150,000 would be 45,000 in taxes that you owe. So taxes owed. Okay. So tax loss harvesting. What's that? So first and foremost, big crypto term you need to know about is tax loss harvesting. Towards the end of the year, you're going to be able to lock in some losses that maybe you accumulated that you didn't sell and apply it to your gain. So if I made and sold and locked in 150,000 in gains, let's think of some projects that maybe didn't go that well this year, like Wonderland. That for me that was a bad one, right? So let's say I lost 50,000 on Wonderland. Okay, so 50,000. Would bring me to 100,000 capital gains. And look, my taxes already went down to 30 grand. So that moved right there. Tax loss harvesting saved me 15K. Okay? So let's put a little tax savings. Let's put it on the bottom here. So it's all this. Old one. Let's get it out. Okay. Tax savings. So tax loss harvesting, we saved 15,000. Deductions. Okay, so do nodes. Let's do slash depreciation. Defined benefit plan. Okay, perfect. I want you to show this. I'm going through step by step, okay? So you're seeing the thought process behind it all, everything. Right, so we made 150,000 to recap, which is 45,000 in taxes. We did tax loss harvesting because our Wonderland went to nothing. We lost 50,000. Now we're down to 100,000 net. So let's go with 100K net in income. Okay. Now, I obviously have deductions that I could take, but before we even get there, let's do a boom. Let's show the power of what strategy. Nodes. Let's buy some nodes. For anyone who doesn't know that, node validators validate transactions on the blockchain. There's so many different kinds. Gala, Strong. Here it's like Gala is one, Strong node is another. Look at those two. Those are more of the bigger ones. There's a ton out there. I would recommend sticking to the bigger ones if you decide to do it. Mining is another way you can do the same exact thing that we're doing if that's something you're more comfortable with. So strong nodes are generally 5,000 a piece. Okay, so let's buy 10 nodes at 5,000 a piece is 50K. Okay, so 50K right off the bat, I can take 50,000 right there. How do I take that? Why can I deduct just 50,000 like that? Why? Here's the thing: when you buy a node, you don't get that money back. And what does that make it? This makes it a capital asset. All right, you're allowed to depreciate this node, meaning that you can either take it over a set years, or as we call it, life, of the asset, or you can do section 179, which is take all the depreciation in 1 year. Okay, in 1 year, too big. So section 179. So I'm going to take all 50,000, one shot. Okay. So let's go. What are the expenses associated to running a node? And that's anything to do with crypto. Let's go down the list. Accounting on 5,000. And auto and truck expenses, it's a little bit of a stretch. Maybe you went to go pick up equipment, nodes, whatever. Maybe we put some miles on there, okay? But very, very conservative, you know what I mean? That's just not a big expense for an internet business. Camera, I'm doing some podcasting. I'm talking about this. I bought a $3,500 Canon camera equipment, maybe another $650 in camera equipment. A cell phone, I bought a new cell phone. I do a lot of work on my cell phone. That was $1,300. A new computer. I got a nice computer. It's $2,400. Some accessories as well. They're at $600. Dues and subscriptions. Some newsletters. There's so much out there for education. So any subscription services, even Amazon, if you're using that for your business, Amazon subscription. So let's just say, $100 a month for all your subscriptions times 12, $1,200. Education and training. You did this node course that was, let's say $1,000. Entertainment. So if you go out to dinner and you say the word cryptocurrency, what I told you in the previous one, get the credit card, swipe, and that's a 30% deduction right there. So let's do, $1,400 in meals. I highlighted some of the more popular deductions, but let's keep going down. Legal and professional. We already deducted accounting, marketing. Got the nodes here. Office expense, random miscellaneous things, $150. Repairs and maintenance, software, supplies, cell phone bill, telephone utilities. I want to say the telephone/utilities. This is the home office. So here we'll take a home office deduction. Home office deduction gives you, money per square foot. Let's see how much it is to 2022. Home office deduction. Simplified method. $5 a square foot. Okay, 300 square feet is the maximum. Let's do the maximum. Okay, so it's $1,500 is the maximum. Travel. You went to Miami crypto conference, so your hotel, your flight, your Uber, your meals out, your conference ticket, everything. So say 5,000. Okay, perfect. So that totals 73,000. Okay, the income was 100,000, leaving us with just show the savings would actually be this number. 22,000 in savings. So just to explain this, we had 150,000 in short-term capital gains. We did some tax loss harvesting for 50,000 because we sold the Wonderland. We were down. We sold it. We bought it right back. We put it into something else, leaving us with a net gain of 100K. Since we had 100K, we said, Lorenzo, I need some tax planning. What are we going to do? I said, you ever heard of this thing, nodes? If you buy them, you can deduct them. So now you bought the nodes towards the end of the year. You got this, bought 10 of them for 50,000. Immediately deduct 50K. You deducted all this other stuff that are associated to having this business, like the accounting, your camera, your cell phone, your computer, your dues and subscriptions, your entertainment, your conversations about Bitcoin. You took me to lunch, that's deductible. Your education, so office expenses, your home office, travel. So all that equal to $73,700. When you deduct it from your 100K in income, you're left with $26,300. Now, what's the tax savings? The tax savings are going to be what we have here. Well, nodes depreciation. Let's just put 50,000 because that's how much we deducted from the nodes times 0.3. So that saved us another 15,000. Deductions totaled 50,000 minus this. That equals 23,700. So let me just do 23,700 times 30%. Okay. And now here's the best part about this. So a SEP IRA or a simple or defined benefit plan is a retirement plan. Let me take a step back. Hold on. So we still have, take this out of here. We still have $26,300 in income left net income left over from the 100,000 that we started off with in gain. We took these deductions and now we have 26,300 left over. Okay. Now, how can I get that even lower, Lorenzo? Okay, let's start talking about other strategies that you could do. There's special retirement plans that the government allows businesses to get into to say, okay, if you put money into retirement, we're going to allow you to take a deduction, just like on a traditional IRA, just like a 401k. But they have special ones that are limited for business owners, such as a SEP, a simple defined benefit plan, defined benefit plan, executive compensation plan. This is when I bring financial services individuals into the picture and we start a team, because it's kind of complicated stuff when you're bringing in these retirement plans into your business. So a SEP or a simple are much more standardized, but you're able to go and put in 25% of your net compensation or up to $55,000. So you could take 25% of this. Just $6,500. Okay. Now, net income, this minus this. So now you're only taxed on $19,725. So how much savings did we have from here? Times 30%. That's another $1,972. So, and now we're from our original, just so you know, from the original $150,000 that we started with, we're now being taxed on $19,725 of income. So if we do 30% here, it equals $5,900 in taxes. The original amount was $45,000. So if you really want to go by the savings, 45,000 minus 5,900 is $39,082 in tax savings on this specific client. That's how much we saved them. Just using this example, there's plenty of more. There's plenty of examples more geared towards high net worth. I would say this example in particular can be used for anyone. You don't have to be high net worth. Anyone can do this. But we do have some that are reserved for a little bit more because you're getting other people's times involved. And what is that time? Time equals money. When you bring on attorneys and you're bringing on trust structures, you're talking about highly specialized people's time. And for someone to spend a lot of money, they should be saving a lot of money. And that's just a model that I use in my business. No matter what, if I charge a client whatever amount of money, I expect them to either save more or make more from the information that I give them. So I hope everyone learned a little bit today and how they can apply this to their situation. But this is how we do tax planning at the firm, or one of the examples of how we do it.